All right, stock market analysis. This is really going to be fun and exciting because I'm going to show you what goes through my mind, how I build the analysis, looking at the probabilities of trend change coming up and how there may be trouble ahead for the market, but why I actually believe that. I'm going to be looking at the structures of the market cycles, and I'm going to be looking at how we build into all of the information to come up with some of the evidence analysis. So I think you're going to find this fascinating, and just watch this closely. So we're going to start out by first not looking at that. That's the weekly chart of the S&P 500, but I'm going to come back to that in just a moment. And we're going to start out right here. This is a daily chart of SPY. And I'm going to take this through the stages of how I do my analysis, and then you are going to really learn a lot. And you'll be able to really, if you make the decision that you want to become a psychoanalyst, you can go to AskSlim.com to the workshops tab up on the top of the front page, and then you will be able to get some more free analysis, a little video I did on psychoanalysis that I think is important for you to see, in addition to what I'm going to teach you right now. So psychoanalysis plainly is an art form, as you see right over here. This is our palette that we work on when we build that, and all four of the analysts on our team are very fluent in this, and fluent of the work of J.M. Hurst, which is the core of his work, is the core of where our work comes from. Though over my 50 years as a trader and 48 years of doing psychoanalysis and learning this, it has evolved in a way that's somewhat different from the way J.M. Hurst originally taught it. And I think you're going to see the type of work that we do looking at it. So what are we looking at here? Well, we're looking at a daily chart of SPY. And we're going to start out with just our basic momentum indicators on here. This is the slim ribbon right over here. And the slim ribbon we have available to put on the Thinkorswim platform. It is also available on TradingView. It is also available on Tastyworks and Wealth 365 charts. So there are 4 places that you can get the slim ribbon. Now the slim ribbon PO on the bottom, which is a very important indicator, is only available for our level 4 members. And what essentially that gives you is not only the momentum conditions, so when it's green you can see that, but when the momentum resumptions come, which are the arrows that you see right in there. So when the market is negative and you get the downside resumptions right there, when the market is positive. In green you get the upside resumptions, and that's really important. You can see right over here today on August 4th, on Friday, we're getting that signal of an upside resumption. So it's kind of giving us a warning that the cycle bottom that we were expecting is probably here right now. So that's a little upturn you see right there. But I'm going to show you much more how I get that. So this is the first look at the analysis. So now I want to step it up, take it a little bit further. So I'm going to go to the next drawings right in here that you can see. And what we want to do is identify the money flow rhythms, the cyclic periods. In other words, what are the rhythms? How do we know that money is flowing in and money is flowing out? And how do we know the condition of the market based on those flows? That's what I'm going to show you right now. So what we're going to do in here is we're going to add the ideal cycle energetics, the money flows, the cycle phases. And if I look here at these green arrows, they're pointing at where these big key lows are that you can see. And what my trained eye is looking for are lows that occur in similar time durations that you can see, like right here to here and right here to here and right here to here, and then one that's due to occur right over there. And what I do is I put in these cycle brackets. That's a drawing tool, and I have that set at 50 bars. So, if I highlight this and I say, let's just activate that, and let's just edit that. So I'm going to click on that, and as you see, it's set to 50 bars right over there as the cyclic period. So what that tells me is that there's a rhythm going on here, and the rhythm is that, well, it rises and it declines, and from this low to this low is 50 bars, and on average from this low to this low is close to 50 bars, and close to 50 bars, and then close to 50 bars. So that tells me that there is a cycle in here that on here is probably the dominant one that is important. So I'm beginning to understand the energies or money flows in the market. So now what I'm going to do is go to the next one right over here, and we're going to look at the drawings right here as I advance them. And now what I'm doing is looking at the cyclic periods, but also adding in what is probably a minor cycle. You can see somewhere right over here in the midpoint there was a decline, and then another rally began. The same thing right over here, a decline and a rally began. The same thing here. So I'm looking at these minor cycles, and this is the development of the cyclic harmonics that you have in here. So you have a dominant cycle and a minor cycle. I want to look at that a little bit more to be sure that I really understand what's going on in here. So I'm going to advance this again to the next process that goes on through my brain, and I'm going to add in the dominant cycle lines and timing lines, as you can see. So now all of a sudden it's really starting to become clear. You can see that though this is where the ideal cycle troughs would be, where they're both coming down in a nested period here, this was just a bar or two off. And we always say that it's like 3 bars either side of the ideal that it's likely going to come. You can see the ideal low is right here, and then right over here on these dominant cycles as I look at these 4 previous ones. So that kind of gives you an idea that something is beginning to happen over here. So we've identified these minor cycles, and the next thing I'm going to do is add in those minor cycles as we begin to look at, again, these energetics in the market and get a real good sense of what is happening as far as the flows of money. So now I've put in those minor cycles right there, and you could see these clear harmonics. We call these harmonic families, just like in music, as you can see, and there's a rhythm. When there is a positive configuration, in other words, it ended higher than it began, then the next cycle is likely to get you above that level. And the same thing right over here, and the next cycle gets you above the level. This is actually a very positive cycle here, and you could see it was followed by these rhythms in here. Also, I do want to continue to look at the momentum conditions, and you can see the slim ribbon positive throughout this whole period. There was one little day in here or two where it went neutral, but the slim ribbon PO really keeping you on track with what are very positive conditions that you can see in here. And I don't have to show you much about the fact that this is an uptrend. I mean, the uptrend looks very clear when you look at that. And, you know, if you wanted to put in some channels and something like that, it would look something like this. And you can see that there is a pretty good uptrend that is very visible looking at that. So all of these positive things, it shows me the positive money flows, and it shows me where to create an expectation that these corrective periods are over with. You see, my brain is starting to look at this and say, well, after, you know, when you get up over here, it's due to have some decline, and then you get over here, it's due to begin to advance, and then when the momentum turns positive, it really enhances that. And you can see where we are right now is that, well, things are kind of looking like we're coming to the end of some sort of a corrective period. So let's advance this again to continue this analysis. And we'll look here as we begin to look at the energetics in the market. So these are the squares, these rectangles I put in here, essentially are showing you that, you know, when you have these both the minor and the dominant cycle moving up, you're going to be in a positive energetic period. Now look at this minor cycle right over here. You can see that, well, that ended up closing lower than it began, and we know that there's another minor cycle in this family. So what happened was it rallied, and this lighter green area is the minor cycle period where it's positive, but then it began to break underneath these levels, and you can see that that began to give you a negative message, as you could see. Here you could see it's different, both moving up. Here's the minor cycle period where it was positive and moved up. And here's where you got a reversal and, of course, the corrections coming down right in here. I often show this as a yellow period of risk where you see that red right over there. You can see the rising period in here, the period where money's flowing in, and the declining period right over here. And you can see how the slim ribbon PO begins to highlight that there. Green positive period here, minor positive period here, and the corrective period. But look at how strong this was. We call this swamped. Why is it swamped? Because there is a force moving on the upside that is so strong, it warns us that the next cycle is likely to be moving up strong again. And you can see in here that minor green cycle right there and this pretty good upward move. Now, a lot of times I will get into this minor cycle corrective period in here and look for a pullback, and people will say, Slim, you were negative. Well, I wasn't really. I was just looking for a pullback. And the same thing as you can see right over here. So you can really get an idea of the energetics in here, the dominant cycle, the harmonic families, the minor cycles, how the energetics work together, and where we're coming to right over here. That's, why Katie did the piece that she did earlier in this show here on August 4th. If you're only watching a clip of this, you're probably going to want to go back and watch the whole show because something is coming up right over here. Let's advance this again to the next set of drawings here, the analysis, and we're going to go here to using the information now to do projecting. So now what I've done is I've added in the this green area here where these cycles are beginning to turn up. These are the cycle lines right over there. And this note here, strong momentum and positive timing translations. Positive configurations suggest a minor pullback followed by a test of the high. Yes, that's what we're looking for right over here, is for a period where it begins to move up. Now, we learn a lot from this over here. How long does it last moving up? And what happens if it blasts through the high and keeps going up? How high will it likely get to? What happens if it comes up here and fails and then begins to move down and gets below that low? Well, that would be certainly a negative thing. And what could influence that from coming? So right now, you can see beautiful cycle harmonics right in here and calling for this corrective period. There's that yellow zone, a small period of risk because it's here on the daily short-term chart in a upward momentum condition that still exists, and the slim ribbon PO giving you that upward view right over there. Let's just zoom in a little bit right over here so you get this picture right here of the strong configuration, strong cycle translations and configurations, and called for a minor pullback in here. And you see we're having this little up day in here, but we don't know if it'll hold yet. There are signs that it will, and that the low might be seen, and we could be getting ready to move up, but we don't know that for sure. As we look in here, it might take out the lows for another couple days. You see this blue timing line that comes all the way out to, well, another 3, 4, 5 days in here before we are, through this bottoming period. So we have to really see how this acts in here. But you get the idea as I begin to use the information for our projections. So now let's look over here at the next one, and you can see that I'm taking the projections even further out. And what I've done in here is I've put in the Fibonacci extension lines over here that gives us an idea as to where it's potentially to move up to and find some resistances here. And I have actually 3 different tracks in here. We'll start out looking at these lower, at the lower one, which would be if it just wanted to follow the ideal patterns that we have in here. That's this right over here. It comes up, tests, take this out a little bit, and then begins to roll over right there. You'll notice right in here that I have a peak right in here on the minor cycle right around mid-August. And there's a reason for that looking at the VIX. And I'm going to show you that when I look at the VIX in a few minutes. But this is a positive period. This is calling for the stock market to begin to move up again, starting either now or in a few days. And then at least testing 459 on the SPY and potentially getting up to this level here, 466. 466 is the next level we had shown, and we showed that level before. Right over here is 473 in that upper track, which is possible based on the formations we see in here. And here's the next one right up over here at right around 480, which in my opinion is a low probability, and I'll show you why that's a low probability coming up, and that the highest probabilities are that it tests this level right over here and then fails, or maybe tests 466 and then begins to roll over. I'm going to show you why I think that's going to happen in a couple of minutes as I move into further in this analysis. But next, what I want to do is I want to look at factoring in the cycles of longer duration to get the alternative projections. So I'm going to leave this chart for just a moment, and then what I'm going to do is I'm going to move over to the chart of the SPY on the weekly. So we're going to come back to this in just a moment, and I'm going to switch over to this weekly SPY right over here. So this is our analysis on SPX actually. And let's start out by just looking quickly at the bigger analysis in here. You can see these, again, these big harmonic families that are in here with the minor cycle and the dominant cycles. Right over here, looking back in 2022, there was a period of risk here that we were looking at from January to March. And you can see that fell hard right over there. Here, looking back into the later part of 2022, you can see in here the period of risk was September, October, and you got that big decline right over there. Here, it began to form a more positive pattern, but there was still a period of risk here, January to April, and you can see that it fell actually from February here down into March, and it was a little bit shorter than expected and bottomed a little bit on the early side, as you can see here. So now we're entering this period of risk right over here, which is really mid-August through October. That doesn't mean it's going to fall from mid-August. It doesn't mean it's going to fall all the way to October. It is a window of time that we are looking for that can contain, and likely will contain, a pretty sizable correction. If you look at these corrections and the size of them, I mean, this was from 48.18 down to 4,100, so 700 points. This was from 43.74 way down over here to 3,500, so that was 800 points. In the S&P 500. This was the bullish one from 41.90 down here to about 3,800. So that was almost 400 points on the downside in a bullish situation. And here you could see that it's reasonable to project that the peak in here right around 4,600 could take it down here to 4,300. That would only be 300 points. That's less than right over here, or over here to 4,200. So this period of risk that we're coming to right over here, this influences our analysis that I showed you on the daily chart, because it says that the projections that we have that are ideally, neutral to lower are the ones that have the highest probability, and the ones that project up over here to around 46.65 are a lower probability. So we still have that here on the weekly chart because, well, we still have strong momentum conditions right here. I know this is a long piece, but I'm letting you into my brain, letting you see the extent of this analysis that I do and all of our analysts do here at Ask Slim, and why it's so important for you, if you want to learn this, to become a subscriber at Ask Slim. I'm going to keep promoting that because I think it's so important to you and to all of our current members, of course. So this is a period in here that I'm looking at that is risky. So if I were to look at the VIX, which has been an amazing timing tool for us over the years, I'm going to look here at the side-by-side for a moment so you can get an idea of what I'm looking at right in here. And that is that we have a bottoming right over here in the VIX. Now the VIX popped all the way up here close to about 18 this week, but is coming down. And that is actually what was expected, that we would get into a period where the market would rally again. But this in here is the bottoming phase for the VIX, just as we believe we're in a topping phase for the market indexes. So if I blow this one up right over here, you can see there's actually, we're looking at a shorter cycle in here that actually might have made the bottom already. If not, it's that black cycle, which are bottoming right in here, which call for that we're in a bottoming phase. Now, I want you to note that momentum on this weekly is turning up in the VIX. That is a sign that we're getting into, like right over here, that rising phase in implied volatilities. Right over here, the rising phase in implied volatilities. So that's what you see, and we're getting the warning right over here that that is happening. When I look here at the daily right over here, you can see that, well, momentum looks like on the short term, it's turning up in the VIX. We're expecting this pullback in the VIX here and the move up into mid-August for the stock indexes. So there's this window of a likely rally for the stock market indexes right here. But then after that, the VIX is likely to be moving up. And I'll go back to the weekly for a second. You can see in here that we're projecting VIX up into the 20s that actually might go for a long period of time, or maybe even up into the high 20s or even into the 30s. This one got up to about 30, and that is not ridiculous if we start to get some real corrective period here in the market. So this is showing you that there is a very likely bottoming in implied volatilities, a very important timing tool. Looking at the VIX. So now if I go back, and these are projections that I did in my analysis on this daily SPY, well, now I have to start to say to myself, why would I be projecting to get up to these levels when the dominant force on the weekly chart starting in 1 or 2 or 3 weeks is likely to prevent that? So then what would the analysis be if we added in the periods of longer duration that are now negative? That would look like something like this, where I have brought that in, and what it still shows you is that there's a period that's positive right in here. We're likely to get a rally into the 2nd or 3rd week of August, testing these levels, but then we get these downward forces that are created by the weekly chart, and that's why I have this yellow period of risk in here. The weekly analysis period of risk is mid-August to early October, and what we must see is the momentum begin to go negative. That would mean that this would turn red over here, the slim ribbon would cross over and be negative, and on the weekly chart we would see the reversal scout, as I showed, begin to go negative also, and our MCM, the market condition monitor, which is essentially our beginning of the development of our AI, has our built-in algorithms, and that would begin to warn us that in the shorter term it was beginning to turn down, and that this upside move in here that's expected is failing. So we're using the information that we have for projections. We're adding in cycles of longer duration plus the VIX to get a sum of the evidenced highest odds projection, and that says to us that this next rally in here that we're looking for is likely to fail, and then we get cycles that begin to trend on the downside. If I look here at this dominant cycle right over here, it tells you the timing for that next cycle trough, which comes in actually around mid-October. Looking at this, so I look at this one, it's also, because they're nested, comes in mid-October, and that means that this correction could be all the way out into mid-October. If it would shorten up a little bit, then it might be early October, but that's where the risk really goes out to, and they're looking at this as we have brought it all to you as far as from the beginning of the analysis to where we are right now, and why I have been warning that there is a period of risk in here. Now, you've seen in the past that, strong momentum on the upside skews these. Sometimes they end up to be stronger than expected. And it is possible that this does move up into these higher areas, and then the period of risk comes in, and it's a sharper downside move that doesn't last quite as long. We can't be certain about that. I'm using the VIX timing to help me. that it's around, the second week of August, maybe the third week of August, that this peak is put in place. And we're going to learn by how this rally develops in here and how long it lasts. So that is a very, very long piece that I brought you with the cycle analysis of that we do, and how I built into it, and how I come to this analysis right now that says to me that there is likely to be risk going forward. Remember, you can learn more about this. Go to the AskSlim.com website, go to the top tabs there, and you'll see workshops, and you can click on Cycle Analysis Workshop, and there's a video there that gives you more information on cycle analysis. And I really encourage you to invest in the workshop to learn more about this, and of course, take advantage of the level 4 special that we have going on right now, which you can see right here. We're in our last 3 days, and just on the top of the front page, click the Learn More button. You'll get details about that. And it's level 4, 3, 2, and 1, everything that's included. Our team does a fantastic job, and you're just going to learn so much when you look at that. And do go to, if you're brand new, sign up for level 1 if you want to just get a taste of what we do to get acquainted. That's just $45 for 3 months, and you're going to get daily information on the indexes that Matt does amazing work on that. So subscribe to our YouTube channel, like this video, give it a thumbs up, watch our member videos in the playlists, and on X, follow us at Ask Slim. And any questions you have on what was shown to you today, write to Matt@AskSlim.com, or you can write to team@AskSlim.com, and they will send your questions to any of the appropriate analysts who you might have questions for.